the thing that surprised me more was the sizes of companies. That's still not unusual.
I agree. I know. Yeah, I mean, they could clearly afford it economically, and
right.
in the I'll call it the EBITDA that's just leaking out month to month.
Right.
Which is just that's their money. It's cash, right?
Well, that's true too.
And why wouldn't you as an owner want to slow things down?
Yeah.
Where you have those,
so you can see the
sit
markers.
downs for half an hour, 45 minutes, and just hit the high points, and then figure out who's going to correct them. Right?
Yeah, absolutely.
And then move on.
Yeah.
At least you don't have leakage.
So thank you, listeners that are joining us. This is David Place from Focus CFO, and he is going to talk to us about how to use our financial statements to our benefit. We see it all the time, and you kind of heard at the beginning of this conversation, right, that it doesn't matter the size of the company. You're very busy doing the things that you do really well, and that may not always be financial. And if you've got money in the checking account and you can pay your employees, it feels good, and money at the end of the year feels good. So why look any harder?
Right. No, very true. I mean, looking at financial statements and just in general, just making sure you close your books every month, whether that's on the 5th business day or the 28th business day, just, make sure you're closing them, sitting down with your CFO, controller, whoever it might be, CPA firm, and make sure, you have comparatives, whether it's this month versus last month or last year. Take a look at them. Make sure you understand where the variances are, why they're happening. Some are good, some are going to be bad, and the bad ones you got to go back and take a look at what are corrective actions that we can put in place sooner than later, so that as profitability is going to be leaking until you stop those those problem areas.
Well, and sometimes it's not a bad thing. Sometimes it's just a change, and if you're not marking and paying attention, I worked with one company and they didn't realize that their gross profit was just eking away because the expense of the items that were used to create their end product was increasing. And, it can be just a normal process. It doesn't necessarily have to be a fault. But if you have to take a price increase, it's better to know about it gradually than I haven't increased my prices to my customers in 5 years. Now I've got to take a big one.
Right. No, great point. Yeah, I mean, we all knew about tariffs, right? I mean, that was right in the front page. But
Correct.
There's so many other things that happen behind the scenes that
Correct.
if you're not communicating and having some regular meetings with whether it's your procurement team or, as you brought up, the case in point of maybe material prices going up and you're not aware of it in time, and then there's months later where all of a sudden you're like, well, why is my margin eroding? And they go back, well, we had a price increase on this, that, and the other thing. And I mean, the sooner you know about it, then you can start to make plans for either finding other ways to save, and cost avoid, or having those difficult conversations sometimes with your clients.
Yeah, absolutely. So if I'm an owner and I'm very busy and I'm air roasting my coffee or I'm, machining my parts and I'm scheduling people, what are the most important things that I need to be aware of from my financial statements? And actually, let's back up just a second. So there are 3 parts to a financial statement. Mm-hmm. Can you just run through those? Because I don't know that we always think to look at all of them.
Yeah. So from a statement perspective, right, you got a balance sheet, mm-hmm. you got a P&L or an income statement that mm-hmm. you hear folks talk about, and then you've got a cash flow statement. Mm-hmm. And that's generally what we kind of keep an eye on. And I always say, I first I'll look at the balance sheet and I'll look at the support behind the accounts that are on the balance sheet. Mm-hmm. I mean, if your balance sheet is supported, then your income statement is going to be fine. The dollars might not be categorized in the right accounts or the proper accounts, but at the end of the day, your cash and your profit numbers are probably pretty accurate because you got a comfort level with your balance sheet. But there's and I'd say that's kind of where look at those 3 statements specifically, and then make sure that you're comfortable with account balances and account reconciliations, and make sure those are done properly and timely.
Yeah, I hate reconciling bank accounts.
Yeah.
I I know that I'm talking to the wrong person with that statement, but that's like one of my least favorite things to do on a personal level, on a business level, all of the above.
Yeah. No, so true. But it will identify, and we were talking about it earlier, about if there's any fraud going on too. If you're not doing a bank statement and reconciling it and taking a look at any reconciling differences and asking why, then you open yourself up to the chance that there may be some fraud going on.
Yeah.
And we see it a lot in small businesses. I mean, more often than you'd think. And it's sometimes the horse is already out the barn for a while when someone already finds out.
Right. But so what do I, if I'm looking for that, right? I'm thinking, my bank account should have more money in it.
Mm-hmm.
Where do I go from there?
Yeah. I mean, so you start to, after the reconciliations, then start looking at you can look at the income statement. You can start looking at to see from a customer by customer basis, product by product basis. You can look at, what are your margins today versus what were they last month, month or last year, and see why there's assuming if the cash isn't at the level that you had expected to be at, or you normally would be at, year over year. Then there could be some things that are eroding, margin, and the sooner you can figure out, where that is, the quicker you can make changes and adjustments to correct it.
Makes sense. Sometimes I might want a third party to come in, right?
Mm-hmm.
Like if I'm worried that the cash is going someplace else,
Sure.
or a myriad of different things,
Yep.
can happen.
Mm-hmm.
One terrible had someone that the operator was ordering pieces, sending them in duplicative, one to client, one to his house, and then selling the one from his house on his own accounts.
Yeah.
And so the project costs weren't tying out, right? Like the what they were expecting was always, they were never earning good margins on that project.
Yeah.
And when we looked at it, we flagged it and said, this doesn't make any sense. Like, give me 4 or 5 more examples. And it was consistently a problem. Mm-hmm. Like, it was consistently. And we went back to them and said, figure out what's wrong. Like, are you bidding your projects wrong? Because that's one thing, right?
Absolutely.
Or are you paying too much overtime, or are you, like, what's happening?
Right.
And they went back and found that was in fact a big problem, but they had not looked at kind of an end of project review on where they came in versus where they bid.
Sure. Sure. Yeah, no, definitely important to know your costs for sure. Your product costs, and a lot of the owners. I mean, they've been at it for a long time, so they can smell it when something's not right, and that's a beautiful thing. Sometimes as accountants we look at it, we look at the numbers that tell us a story, but sometimes the owners can just say, they can look at or just see something and know something's changed,
right?
And then it's really up to us to go in there and put some, to actually
figure out what it is.
Yeah.
Yeah. And it can be anything. Right?
Yeah.
Like anything can happen.
Yeah.
Software costs go up.
Yeah.
Insurance goes up.
Yeah. Walk the floor. If you're in a manufacturing facility and you have that option as an owner, make sure you're out there, and sometimes, walking around, you'll see machines that are down. You'll see some other, waste on the floor, waste in baskets, I worked for a company at one point where, we'd go out and see the trash bins, and just take a look, and because people don't want to tell you there's problems out there.
Oh.
They would just, at the end of the day, dump stuff into different, trash bins and cover it up with something else. Hopefully you don't work in an environment that people are fearful of that stuff, that they would raise their hand and tell the owner or their supervisor that, hey, we got a problem with this machine over here. It's banging out a bunch of scrap, and we need some preventive maintenance, or at that point really maintenance to try to
fix it.
Fix it, yeah.
Absolutely. Okay, that's all good tips. What am I missing? What should they What
Well,
are
I mean,
what red flags?
Yeah, you can get back to being proactive, right, and setting up metrics or KPIs and within your business, so that you set expectations. You've got historical results that you can pull from, and set up a baseline. And then we all, as all business owners, they have goals, right? What are those goals in the company, and kind of start there and work down, in terms of trying, because people will say, hey. I have goals, and I'd love to do KPIs, but what KPIs do I pick? And there's so many out there that we could sometimes waste our time on, if we're not focused on the right things. And I always tell folks, hey, start with your goals. What are your business goals? Short term, long term. Short term, next 12 months. Long term, maybe over the next 36 months, 3 years. And whatever this might be, don't make them voluminous, but, make some, could be growing revenue. It could be, it could be a cultural or HR thing that you want to improve on. It could be just documenting processes so that, if someone leaves, you can kind of, cross train very quickly and keep the business moving. But whatever those are, those goals are, set up some strategic initiatives around those. Okay. Maybe it's by function, or maybe it's over across the top of the whole, the whole business. But then just tag KPIs, metrics to each of those initiatives, and then just start tracking them.
Yeah. We have a scorecard.
Yeah.
For our business.
Sure.
How much happened each week.
Right.
And that's where we start our weekly meetings.
Yeah.
Looking at our scorecards and seeing how we did.
Yeah.
Right. Like
Yeah.
it's.
Yeah. And, if you do have, you have these goals, and then you're starting to put some of these strategic plans in place. It's a great way, as you go forward, to make sure that, you're seeing, you're inspecting what you expect, right? You're expecting to start working towards those goals. Are you seeing that in those metrics and KPIs that come out, whether that's weekly, real time, right?
Yeah.
A lot of, business owners I see will have some sort of dashboard on there that they can just, go to as a, right on their desktop, and see how, orders are going, for the orders coming in or shipments going out for the day. And they can pretty quickly tell how the week might be going or the month might be going based on that.
On the
feedback.
productivity. Yeah. I was talking to a client, and we're in mid process, and we got the updated numbers, and I'm like, you even down a little bit. What happened? We had 6 snow days.
Yeah, absolutely.
I was like, oh yeah. That's true.
Yeah.
We did.
Yeah.
But they knew, right?
Right.
They had looked at it. They knew why they were down.
Yeah.
They knew that,
Perfect.
the orders are still there,
Sure.
which is great.
Right.
But that's why.
Yeah.
Because couldn't get there.
Every industry has its hair, right? And there's different things that impact you a certain way. And certainly, in manufacturing, if that is your industry and business, those things definitely can impact. And not to mention just, sometimes employee vacations, the timing of those, making sure you kind of manage those if you can. Because, you don't, all of a sudden you're going to, 1 month, you're going to probably have a ton of overtime because you got people away from the business. Yeah. Got to make it up. So.
Yeah. Yeah. That's what they're like. Wait till next month.
Yeah. Right. Right.
Great. So, but you're going to pay all the overtime to.
In between.
Yeah.
Yeah.
To get it there.
Yep. Absolutely.
But yeah. How do you manage overtime? Like in terms of financially?
Yeah. Well, one, you got to pay for it, right?
Right.
So we take care of that. But, like I said earlier, just a couple of minutes ago, and trying to look at vacation schedules, making sure, the best you can, right? The summer is obviously most people want to take vacation, but try to, in terms of managing, whatever department, obviously operations, or just it can come right down to, customer service or accounting even, you want to make sure that you've got a decent crew intact, and a good schedule. And then on the operations side, trying to manage that beyond just making sure you got the right folks, and not only the right, you got people right in the business and available, but also they're cross trained, right? So they might be walking, they normally work on that machine every day, but if Jim's out or Sally's out, they're cross-trained to be able to go over there and run that. So depending on where that orders are hitting for the month, it could be different machines.
True.
If they're not cross-trained, that machine's down and you're not getting those orders out that month. So
that's true.
But, also just another way, you can also try to, instead of just level loading, the floor, if you can have a dip in manning for a couple weeks or whatever it might be. Just make sure you're having those conversations with your clients and customers, and maybe it's just you date deliveries a little differently, but set expectations with them so you're not,
right.
not messing that
You don't
up.
want to be late for an order.
Right.
That's not a good thing.
Right, exactly.
So if I'm looking at my financial statements, and let's say I've never looked at them before, right? We've just finished tax season.
Okay.
And I'm getting my financial statements, and it's not something I've paid attention to, but I heard this crazy lady on a talk show, and she said I should be looking at them.
Yep.
So I'm going through, and I've got them. If I've gotten them prepared by a financial person, I probably have last year's and this year's next to each other.
Sure.
And I'm getting kind of the breakdown.
Yep.
What do I need to know from what I got? And how do I use that information tomorrow, the next day, and the next day to continue to perpetuate my business either to a new goal, right?
Yep.
Or just to keep doing the same thing.
Right. Yeah, I mean, well, you get them, and again, as I said earlier, you just talk about, hey, what are the variances that you have, and try to correct those, right? But you're also looking at trends too. So if you got a 12-month trended running, income statement, sales through, gross profit or sales through net profit, or EBITDA, you can easily see. Where there's dips, where there's, changes have been. Correct those, adjust for them. And then really, I mean, if you're not doing it already as business owners, forecasts are really, really important, whether you're forecasting cash or
forecasts are really hard.
Yeah.
So
true.
Yeah, I would say, I've had plenty of people telling me I can't forecast in my business for, XYZ reasons. Sometimes there's some validity, right? If you've got new projects, you don't exactly know what you're getting to bring in.
Right.
But so how do I create a forecast reliably, right? We always look at our owners and we're like, if we've worked with them for a couple of years, if they've come in through our Exit Advantage program, we're going to be like, okay, they make rose-colored glasses. Their forecasts are always above, or their forecasts are always below.
Yep.
And it seems to be pretty consistent
Right.
with whoever made the forecast.
Sure.
So if I'm making it, how do I know it's right? And what do I use as my markers?
Good question. Well, historically, when I got involved and asked to put something like a forecast together moving forward, always start with last year. And say, okay, here's our 12-month. January, say it's a calendar year company, January through December. Here's what we did, right?
Okay.
If there's seasonality in the business, you're gonna that'll be right in there. Just
Right.
like be consistent with the next 12 months. You're trying to forecast in January of your new year, and then you go through and you say, okay, what things have changed? Have my prices gone up on my my material costs? Have I had a wage increase at year end that I've got to factor into my forecast? So you have, and then you make some certain assumptions as well, where, hey, I know that in the second half of the year I'm going to do a price increase. So from July on, I'm going to add 4% to sales per month.
Okay.
And I'll base that off of last July through December's results. And so you kind of start there. It's more of a art than it's a science, I think.
Absolutely.
So I think you have to start somewhere, and then as you go out, you'll start to see where, wow, why did I miss this month on my forecast? What what was it? And then you just kind of fine tune those things as you learn and get some experience from it, and then it gets better and better. But certainly try to make the next quarter, right? That's something that's right here on. You want to be really kind of tight with that. and at the best you can, right?
Right.
And the longer you're doing the forecasting.
Well, and that's a good point. Everybody assumes when we say forecast that we want the whole year, right? What's your forecast for 26? But if you're just starting to forecast a quarter.
Yeah.
See how you do.
Absolutely. Yeah. I mean, you got, a lot of, and you're not only just looking for yourself, but you also got banks sometimes involved. So there's covenants, if you have some debt. And so it's important to, if you're having maybe a soft quarter or anticipate one, it's good to have conversations with your bank as soon as you can, under those situations where, hey, I just forecasted my covenants and we're going to be kind of tight, but we're going to do the best we can. We might have to, scale back, manning or whatever it might be,
Right.
travel or, you hate to get in those situations, but we all have been in them, and working in companies because, at the end of the day, you gotta, try to, you've got commitments to people and you gotta do the best you can to make them.
Well, and if you're doing a forecast on a forecasted budget, then you have the ability to make those choices in advance.
Absolutely.
Instead of being reactive.
Sure. Yeah, I'll give you an example. I mean, back in 2020, I worked for a company that was basically a fiscal year in June 30. And we were ending our first half in November-ish. So our second quarter, right? Almost heading into the holidays. And, I actually happened to be we were forecasting out to the end of the year just so we could see where we were at. And I'm like, hey, if the second half is like our first half right now, the way we're not going to make covenants, in the second half of the year. And so we started to make some changes on manning. We had some furloughs around the holidays, which weren't horrible because some people like to have time off if they can. And we had the state of Connecticut has a great program for unemployment, and so we used some of that to our advantage. And
actually, most New England states have programs like that
do they?
now.
Okay.
They do.
All right. Good to know.
So if you're running into a tight spot, you can have some state assistance for furloughs.
Yeah, and we furloughed with the help of the state, which was great. And so and then little did we know, but COVID hits right in the spring. And so
forgot about
that was 2019 going into 2020, and in April, everything shut down, right? So the interesting part was fast forward to that October period, 4 or 5 months later, and we got a PPP loan like everybody else did, or most folks did, and but then it was now, okay, can you get it fully forgiven by the SBA?
Right.
And,
that was not sure.
And a lot of people weren't, right? So there were periods of time that you took your labor count, in that October timeframe of 2020 and had to compare it to a look back period.
Right.
Well, our look back period was in that late 2019 period, and we had actually, because we had furloughed, our full-time equivalents were a lot lower than they were in October of
that makes
2020.
sense.
And so we were fully forgiven. I got to tell you, if I wasn't forecasting, or we as a company wasn't fully forecasting, out at least to the end of the year, 7 months out at that point, roughly, I don't think we would have gotten some of that loan, if not all of it, forgiven.
Yeah.
So again, just a quick example of how important it is to be doing those.
Well,
forecasts.
and that's, knock on wooden table. That's hopefully not a specific situation that we run into ever again.
Right.
But we keep running into situations that are anomalies, right?
Yep.
Tariff impact in last year.
Sure.
Tariff recovery that's in question currently. And how do I do this? What do I do with it? Does it count for 25? Does it count for 26? Where do I pay taxes on it? Do I pay taxes on it?
Right.
There's
How do
about
I
a
get
million unusual questions
Yeah.
that come up in situations.
Sure.
So there's always something.
Yeah. I mean, the only, consistent thing is change, right? So, you just try to do the best you can to navigate that and prepare for it.
Yeah.
So the best you can. But yeah, forecasting is a great tool for that. So you do have, you can kind of anticipate some of the things that are happening before you have to actually get there.
Yeah,
and live 'em.
absolutely. Well, and there's always what you hope for, right? We beat our forecast.
Yeah.
That's what you want to end up with, is to have a forecast that's on point, that you can plan to and achieve past.
Right.
Right?
Yep.
Let's have more sales than that.
Absolutely.
That's the problem you want to be adjusting for.
Yeah. Right. Exactly. Yeah. Good point.
So the other stuff is more realistic.
Yeah.
But that's the one we all strive for.
Sure.
Is to be above it.
Yeah.
So forecasting, very important. How does KPI drive our employee count? Like, do you use your KPI to plan for HR, to plan for, well, how does the financial forecast tie to functional forecast?
No, great question. I mean, if you've got certain revenue, goals, if you will, for growth, you've got to impact that growth. Ideally, like you said, that's good news if you get it right, and you can surpass your forecast, but it impacts the entire business, right? So going back to manning, as you brought up, but absolutely. I mean, if you're as these strategic initiatives, right, that you're monitoring with these KPIs, could be, I'm going to open up a new store. I'd open up a new store, or a new warehouse. I'm going to take on. My goal is to grow my client base by 400 or 500 accounts. Okay, that's gonna, that's great. So you need some support probably in sales, right, in some way. So you got to start looking at filling those roles. But it's the to help you accomplish those goals. But yeah, definitely, as you people just don't show up today and are ready to go. Sometimes there's some training involved, and so you want to plan around that as well, so that when they get out there, they're as efficient and productive as and ready to go when those orders start coming in.
Yeah, it's a balancing act, right?
It is. Yeah.
Often we see owners that love their employees, and sometimes they keep their employees extra.
Right.
Right.
Yeah.
So you've hired the replacement, you've trained the replacement, but John's not ready to go home and sit in front of his TV all day, or play golf all day,
right?
And so we end up with some extra staff every now and then too.
Yeah. And generally, and I've been great question, great point. And I've been in those positions, and it is really tough. I mean, at the end of the day, the owners own the business, right? So we're there to support them and be sounding boards for them. And you just, you can definitely see a lot of that in businesses. And usually, unfortunately, it's a down period where the owner finally realizes that maybe it is time it's a good opportunity to have a tough conversation with somebody.
Having the KPIs helps those tough conversations, though.
Absolutely.
Right?
Yeah.
Like, exactly what you're pointing to. You have the markers, you have the information.
Yeah.
It's a lot easier to.
Yeah. And the credibility, right? Because, the owner, you want them to have the credibility in you that you're giving them good numbers, right? Your forecasts are crisp. They're getting better and better, so that they can, when they have that good conversation, it's not like, they're not like, geez, I hope I'm not,
right.
Are these right? What I mean? If they're not right and I got to have this conversation, it's like, it's
come to find out it was wrong and you've already let the person go.
Right.
They're not coming back generally.
Right.
Like that's.
So, yeah. So, having credibility in your numbers is really key.
Yeah, absolutely. Well, thank you so much for joining us on Touchstone Talks. I have one more question for you that I ask all of our participants.
Sure.
If you were not doing fractional CFO work, and you had to pick a completely different career, what would it be?
Sports radio.
Oh.
Love sports. I could speak into this microphone all day long. But yeah, I would do that. I think I would do that. Probably wouldn't get paid that well, but
I don't know. I think there are some really well-paid sports.
Yeah. All right. Well, that would be then sign me up.
They probably have a podcast at this point.
Yeah, true. But yeah, I think I love, I think that would be, I don't think that would be called work for me. I'd enjoy that. So
it's okay. That's the whole point, right?
Yeah.
Also what we want for our business owners, right? They've done this all year. What else do they want to do?
Yeah.
Their whole life they've done, run the widget company.
Right. Yeah. No, I mean, it's, I think we've had these conversations before, and it's important when you do go to sell your business, and Deborah, they bring you and your team in to help them do that. It's really important to have a hobby that you're really ready and willing and want to go to and do, and whatever that could be, and volunteering.
It is not always a hobby. Yeah. I went to a really interesting panel the other day, and they had 3 business owners presenting. One of them had sold his business, and he was now a priest.
A priest.
A priest.
Wow.
He went and
Okay.
Yep. Good for him.
Yeah.
But went back to school, went to seminary, the whole thing.
Yeah. Okay.
The other gentleman had written 3 books.
Okay.
And the other gentleman started another company.
Yeah. Yeah. I was working for a family business at one point, and we had some M&A folks come in that were looking to buy the company, and they sat down and they asked the owner, what hobbies do you have? And he basically said, "This is my hobby," And I looked at the folks across the table, and they're like, if when we hear that, we know the deal's never going to get done. It's not really worth our time to get in there for them or for us, because right, they're just not ready at that moment in time, to get involved. So
and that's okay.
It is.
It's your business. You get to do with it as you will.
It is.
But it's always a good thing to think about.
Yeah.
If you can't answer the question, you're right. It's wrong.
Right. Very true.
Great.
Well, Deborah, thank you for having me today. I appreciate it.
You're welcome.
Enjoyed our conversation.
You're welcome. And to our listeners, if you have not subscribed, and followed Touchstone Talks, please do so. You can find us on all major podcast links and a YouTube channel. And if you'd like some CFO support, David's information will be at the bottom of our page, and you can contact Focus CFO.
Thank you.
You're welcome.